Good afternoon. Patrick Dwyer and Greg Pool here to talk about our side bet, Welltower. It's our wide moat longevity play. We've owned Welltower since January of last year, had a great year last year. This year it's up, having another great year. It's up 35%. S&P is up about 14%. Why have we owned Welltower? Because as America ages, senior housing and healthcare real estate aren't just resilient. They're positioned for decades of secular growth.
Yes. So our thesis is this was our aging play, and we looked long and hard to find something that we thought expressed it. Welltower is the largest healthcare REIT in the U.S. It's focused on senior housing, post-acute care, and medical office buildings. The demographic wave is undeniable. By 2030, we're going to see every baby boomer over 65. Demand for senior housing is projected to double over the next 20 years. While supply growth has been really constrained post-COVID, nobody is building new supply. And these guys are really acquiring up the entire sector. That supply-demand imbalance means higher occupancy, rising rents, and durable cash flow. And because healthcare is need-based, Welltower's portfolio should hold up even through economic cycles.
Absolutely. And why it's a side bet? Like, why do we say, hey, you should buy the stock and hold it for 10 years? I mean, that's the question, right? Unlike tech or energy, real estate isn't about explosive growth. It's about steady compounding income. And Welltower gives us exposure to healthcare real estate, which is backed by demographic certainty, right? And it's backed by inflation-linked rents that can protect purchasing power. And it's defensive in its positioning with really low correlation to traditional equities because it's not cyclical. It's not flashy, but over the long term, healthcare REITs like Welltower can deliver some consistency that kind of smooths out portfolio volatility.
Yeah. Now, again, like all our stocks, this is not without risks. The risks we would highlight here are, if we get into an environment of rising interest rates, that can pressure both the business itself, but certainly the valuations in the REIT sector. Secondly, this is a difficult business to operate. We know that. Operating costs, labor shortages in senior housing could cause certainly an unexpected hiccup in performance. And then there is also policy risks around healthcare, both reimbursement and Medicare, Medicaid, et cetera.
Absolutely. And the conclusion is, we've owned it since last year, since the beginning of last year. Actually, our conviction on the space has only grown. And not because the stock has really had tremendous performance, it has, but that doesn't always happen. It wouldn't really change what we think. In a world chasing the next hot theme, we think this side bet is really grounded in really good demographics, necessity, and steady income. And we believe Welltower remains one of the most compelling long-term plays on the aging of America.
Thanks for listening. Appreciate it.
We're bullish.